Hello traders, welcome to today's live stream. Sorry, I completely forgot to upload the live stream for you to come and join at 2 o'clock, and I got onto the trading platform and I was like, the streaming platform, and I was like, oh, I haven't updated it, so apologies there. So starting a little bit later than usual. I had to put it on as 1:15, but I thought I'd start it anyway. So apologies for that. That's my fault. I completely forgot to upload the live stream data. Hi Tony, hope you're well. Some interesting moves in the market at the moment. Bit of an up and down week for me so far, actually. I ended up taking a pound US dollar position long yesterday, which worked out really nicely, and then basically gave all my profits back today on the same trade. So I'll talk you through a little bit about that. Bit of an up and down week. FX markets at the moment, a little bit whipsawy, I must admit. It's been quite a difficult trading week, just in general. A lot of markets on the pullback. I also was in a Kiwi yen long position. I took a little bite on one of those moves. I was up quite a decent bit, and then it came and kind of took me out overnight after we had some positive comments from the Bank of Japan. So we'll keep an eye on the yen front. At the moment, we've been talking a lot about, contracts are at extreme levels from the commitment of traders, which is something I like to look at. Just makes me a little bit more cautious when it comes to applying risk in the market. So we will keep an eye on that. At the moment, if we look across the board, if I just go over to the futures market, still very bearish when it comes to markets at the moment. S&P still on the decline. We had a little bit of a boost up yesterday, and then the inflation data sent it back down again, which is interesting, really, considering that inflation CPI year on year was down to 2.8%. That would usually be a positive for the stock market. But if we look at this hourly chart here, the data came out yesterday at 12:30 p.m. So if we go to the 12:30 candle, was this candle in here. So you can see it. Initially, we had a little bit of a boost up in price, but that didn't last long at all, because usually CPI was coming in lower. The market would potentially try and price in more chance of rate cuts, and we typically see the market kind of rally, but we haven't. Instead, we've still seen this kind of depreciation of the S&P right now. The same goes across the board as well. Nasdaq also still down 1.4%. So is the Dow Jones, and the Russell also down as well. So US stock market's still not doing particularly well. I think this starts to put us in that dangerous territory of, what is this? Is this a significant sort of market shake-up right now? Are we going to see a decline? One thing that I've looked at in the past is just how the market, let's put the 200 EMA on there, usually sort of comes back and retests that 200 moving average on the weekly chart after a sort of a long period of bullishness. And we have had that long period of bullishness since 2023, really, or the end of 2022. We've had that really nice push up in the stock market. Are we going to come back and test this kind of 4800 area? I mean, if we do, I think that's a great buying spot, to be honest. That to me would be where I'd be looking to try and get involved with the markets at that point. But what does that mean for the rest of the market, right? If we end up going all the way down into this kind of 4800 area, what does that mean for everything else? That to me is sort of yen strength in the market. still, right? Which is something we are anticipating, is that continued yen strength. What else does it mean? You're probably going to see your likes of your gold, right? Gold and silver continuing to push to the upside as well, which is something I'm looking for at the moment. I am in a silver trade again to the upside, and that one is doing pretty well at the moment. It's just about to go touch those $33 areas. Once again, I'm looking for it to kind of breach out of these now. I'm looking for the kind of momentum push here to break into new highs, to go and search for the $34. If we just go take a look at silver prices right now, trying to head up towards this area now, you know, having this little push up to the upside, which we've been talking about all year, right? Silver has been our one to buy all year. Pretty much every dip that we've had, I've been a buyer of, really because of where the gold silver ratio is, right? Let me just actually change the screen for you so you can see what I'm talking about. Hi Vincent, hope you're doing well. You know, have a little look at the gold silver ratio. I think it's really important to try and understand this, and I think, you know, this is where you can just go to a little bit of a deeper level on your analysis if you are looking to try and, you know, think outside the box a little bit. Gold silver ratio up at 90s, right? Look at it when it was up into the 100s, 115, 120s. This was COVID, right? Let me just take off the moving averages here so you can see. This was COVID, where we saw a huge rise in the gold silver ratio, right? Now look at silver prices compared to that. Okay, so as that gold silver ratio was pumping higher, okay, we can see silver prices declined significantly. Okay, what happened though was when it reached this high point and it turned, silver prices rallied aggressively to the upside, right? So this is where I'm at right now. Every time I kind of come into a significant high, I want to be looking to see gold silver ratio fall, silver rally. Okay, comes up into a high here, silver rally, gold silver ratio down. We chopped around for a while, we hit those highs again, it dropped. What happened to silver prices? Rallied. We're back in that similar position now. What's happening to silver prices? They're rallying. Now if this continues to kind of drop down, then I want to be, you know, looking to buy the dips on this silver price. So for me right now, silver's a good place to be. Obviously if we breach into new highs, then maybe we're going to see a bit more downside on the gold silver ratio, and silver maybe, you know, might take the front of that move. But at the moment, I like where the gold silver ratio is. I like how that correlates to silver. So I am continuing to look at to sort of buy into silver. So basically what I was looking at earlier, again, thinking about it in a fractal way, what do we have here? Okay, we have an upward trend on the 4-hour chart. What do we have? We have the primary phase, secondary phase, primary phase, secondary phase. What happens in a 4-hour secondary phase of a bullish trend? You get lower lows and lower highs. So what did I wait for? Wait for a break of that. Got in long here. Stop losses I've put just below these swing lows here. I'm looking to try and trade this to the upside. I want to see it try and break these highs now and see it kind of really push towards this $34, $50 area, which is where I'm kind of expecting silver to try and break towards, try and head towards at the moment. So that's something I'm kind of keeping my eye on the side there, just kind of seeing if we can, you know, continue to sort of push to the downside. All right, just nothing. I'm doing really well, thank you. Hope you are well too. Oil wasn't a great trade for me this week, but it looks like it's now starting to push a little bit lower. We've got this kind of real choppy consolidation though, so not bothered about getting back into oil just yet. I think if we break below this $67 area, you know, if we still see signs that production is going to increase, then yeah, I like the idea of being a seller of oil prices as well. But at the moment, it's just we're not getting that. We're at this kind of $67 area. It's a big level of support. I'll need to see that broken in order to try and get any kind of further moves to the downside there, unfortunately. Let's see what platinum's doing. Platinum and silver have a really close correlation. So, you know, if you're looking at silver longs, then platinum longs could be something to look for as well. Just a little bit more choppy, a little bit heavier on the spread. So you might need to be a little bit careful on those type of markets. But yeah, still a sea of red at the moment when you come across stock markets, especially when you look at the S&P 500, NASDAQ as well. FTSE starting to gain a little bit here, but it doesn't look like there is a strong, you know, push higher coming from this area, does it? Not really looking very healthy at the moment. Any kind of stock market is just struggling. So let's have a look at some data that's come out. Had some data coming out today. So this was the US core CPI that came out yesterday. We also had a Bank of Canada interest rate decision, 25 basis points. Quite interesting, actually. Bank of Canada, 25 basis points cut, but talked about the idea of not cutting again. There are 2 cuts. The market's expecting 2 more cuts, but Bank of Canada have kind of warned about sort of tariff risks. And I mean, they are starting to ramp up again, these tariff risks, aren't they? Donald Trump yesterday decided to, well, actually it was this morning, I think, where we saw him. Well, I think what happened was Europe put a tariff on whiskey, 25% tariff on whiskey. So Donald Trump turned around and said, okay, if you're going to do that, we'll put a 200% tariff on champagne. So, you know, quite tit for tat at the moment, isn't it? Someone comes in with a tariff, they rebuttal his tariffs, he goes heavier on the tariff. He just wants reciprocal tariffs, basically. That's what he wants. He wants to, whatever the USA are being charged, he wants to charge other countries, which is obviously causing this trade war narrative at the moment. But I mean, he's getting what he wants. He's getting an inflation that is coming in lower, you know, on the year, 2.8% on the year. And he's getting, you know, and he's trying to get the US to produce more in their own country, right? So looking at latest data, some decent data actually. Let me actually refresh the page. It's not refreshed on here. Here we go. So when we look at the data that's come out, core PPI, okay, minus 0.1%. So that's quite a deep pushback on that. We've also got PPI month on month coming in at 0%. Positive unemployment claims coming down to 220k. Previous was 222. Forecast was 226. Comes in at 220. So that's your positive out of that data there. When we go into this, okay, just kind of give you a bit more overview of what it is. It is the change in price, change in the price of finished goods and services sold by producers, excluding food and energy. So that's quite interesting, the fact that this has come to minus 0.1%. That is very, very significant, because what does this tell you as well about the demand in the economy, right? If the change in price of finished goods and services are coming in negative, right, tells me that there is a lack of demand in the market, okay? Because if there is a lack of demand, it creates oversupply. If there's oversupply, prices come down, okay? It's as simple as that. And the interesting thing about this is core PPI, right? So core PPI, okay, so you can see here, excludes food and energy prices, okay? So that makes up 40%. And even that's dropped to 0%, okay? So that's something that's interesting. I wonder if we go on to the... if we can see the actual breakdown of that. So producer price index, that was released. Okay, so we can read through these. The producer price index for final demand was unchanged in February, seasonally adjusted. The US Bureau of Labor Statistics report today. Final demand prices rose 0.6% in January and 0.5% in December. So that's the adjusted data that you can see there. And then we come down to sort of final demand. Final demand goods, the index for final demand increased by 0.3% in February, 5th consecutive rise leading to the February advance. Prices of final demand goods jumped 1.7%. And then we come down a little bit. Final demand services, the index for final demand services fell 0.2% in February, the largest decline since moving down 0.2% in July 2024. February decrease can be traced to margins for final demand trading services, which dropped 1%. In contrast, prices for final demand services, less trade, transportation and warehousing rose 0.2%, while the index was unchanged. And then it gives you a little bit of a breakdown here. So if you're actually looking for the data in general, you can come over to the statistics website and have a little look. Bureau of Labour Statistics. And then this was our CPI summary as well, which basically gives you all the areas, okay, and it shows you the change, okay. So you can actually see energy, commodities, gasoline minus 3.1, fuel oil minus 5.1. That's what you see in that big take on that CPI number. So interesting developments there, but that has caused the US dollar to kind of sell off a little bit. I was expecting the dollar to remain fairly bearish. If we look at the US dollar index, we're kind of trading down towards that 103.50. So I ended up taking 2 positions long in pound yesterday. Sorry, one today, one yesterday. My first trade was here. Okay, so you've actually just put on the session breaks, you can see pound US dollar. I really like the upside in this market, and again I was kind of just trying to find an entry into this because currency strength meter was suggesting we buy pound, right? So I wanted to try and stay on the side of the currency strength meter. Pound +5, US dollar -2. So I wanted to sell US dollars this week essentially. But the problem we had was we've had this kind of huge move last week. And I didn't know whether we would see a continued follow through. Usually after such a large trading week, we either decline or we go sideways. Instead, we've had this kind of slow grind higher. And I do like the idea of pound coming into the 1.3 support. So what I was looking at was the 4-hour chart. And what I noticed was the market rallied, okay, pulled back, rallied, and pulled back again, right? So here is our primary phase, secondary phase, primary phase, secondary phase, okay? So I like to look at when the market is going into that secondary phase, okay, because markets are pulling back, and it gives me an opportunity to then kind of jump on that potential reversal if we do see one turn around, right? So what I was looking at in this, so when I look at it in kind of like fractal ways, what I want to do is go down 2 time frames at least, right? So I'm looking at the 4-hour trend here. I'm looking at a 4-hour secondary pullback phase here and here. So I'll either go down to the 30-minute time frame or the 15-minute time frame. In these examples, I went down to the 15-minute, okay? So you can see within that secondary phase, right, what do you notice? Well, you notice that on a 15-minute chart, price makes lower lows and lower highs, okay? So all I was looking for yesterday was the change in that. Okay, the change in that. Where did that change come, and how can you kind of spot it? 2 ways you can really try and spot it. The first way is look at the lows, right? If the lows fail to get lower, right, then that's a sign that the market is going to turn. The second way is waiting for a break in the trend, right, which is exactly what I did. I waited for the market to break trend here. I ended up taking a long position here, put my stop losses below the low, and I ended up having a target which was around this kind of 129.85 sort of area. And then CPI hit. This was the US CPI data yesterday. So US CPI came in. We saw huge sort of downside in the US dollar at that moment, and price rocketed, just about took me out for a TP. Okay, market then retraced, rallied again. So I was looking again this morning and saying to myself, well, the market is pulling back again. We've got this nice sort of lower low, lower high pattern. And what I noticed was we had this really sort of large breakout candlestick. So I went for a long position on that breakout candlestick, put my stop loss below the swing lows here, but I only risked 0.25%, but still market ended up just going sideways, took me out, shot back to the upside, come back. So we've got really choppy price action here today. I mean, I do like the idea of being long pound into 1.3, hence why I took this trade here, which was a winning trade, which was nice. But at the same time, I didn't really get that sort of momentum that I was looking for earlier this morning. That being said, look at price action now, right? Although this is choppy because the high technically is up here, you could look at the closes as a potential breakout area. But essentially, we've got this potential head and shoulders that's being formed here, right? So when I look at cable and I look at this at the moment, if I go up to the 4-hour time frame, is price still in a bullish trend? Yes, you know, market's making higher highs, higher lows. Are we in the secondary phase? Yes, great. Well, I'm looking for that moment where that turns, and that then potentially goes to create a new high, which could be at that 1.3 area. Okay, so that's what I'm looking at right now. I'm looking to see, can we get that sort of push back up on cable up to 129.99, or at least 1.3, but probably like to come out a little bit before that. So what I'm going to have to look at now essentially is I need some kind of retracement or some kind of pullback here, because looking at the 15-minute time frame, if I was to map this out, and let's say I take the close above these highs when it comes to closes, right? Because if you go and look at it from a line chart point of view, if that was to close above there, you've technically got your close above your previous high, right? However, when I look at it from a risk to reward standpoint, okay, so let's say we go, or I go long at this level here, got to put my stop losses below these swing lows. So 129.20, probably looking at 129.15. When I go and target 129.95, I do get a positive risk reward ratio. So that's not too bad. That's not too bad. Would I like it to be a lot lower though? Yes. So, you know, if we can try and get back down towards this kind of 129.40, sort of 129.30 level, that would be a lot better for me to try and take an opportunity to the upside. So I like pound long. This to me is starting to make the right moves, because although you've got this long wick here, we're kind of breaking above those highs there. That is a good sign that could potentially kind of create a move higher. But if it's fractal, I'll just have a look again. So if we do see the 15-minute time frame coming in like this, this is where it gets really tricky. You can either go down to a 3-minute time frame or a 1-minute time frame. These are not something that I tend to do, but you know, trying to get an order on here might be a bit tricky. So if I want to be long and I want to be long to there, sometimes you've got to go to a lower time frame to try and get an order in. So we'll see what happens if we can kind of pull back. I'm going to set an alarm around 29.40. If I can come back towards that area there with a close above this line here, I'll be looking to maybe go long on cable at some point again today for the second time today. Right, some other markets that we were looking at as well. You know, euro. Euro to me is a bit more troublesome, just because if we have a little look at where euro is, euro has kind of pushed into the 1.09 handle. We've also seen this kind of tariff back and forth, haven't we? So don't really like the idea of buying euro here right now. So I'm going to sit and wait on that one for a little bit. But cable I do like the look of. Aussie, no. Kiwi, no. Dollar CAD, it's just stuck, isn't it? Again, trade, tariff, war situation is just making that market very tricky. I mean, when you look at the price action over the past month, 2 months, you know, we've just pretty much gone sideways. You know, that's not typical sort of trading in markets that look easy to trade, is it? You know, so dollar CAD is a difficult one at the moment, so I'd very much stay away from that market in particular. Okay, so not something I'd want to go and trade. Dollar yen technically still in a nice little downward trend here as well on the daily chart. Market is still making lower lows, lower highs. Currently we are in the secondary phase of that move right now. So again, you know, if we were to go fractal again, jump down 2 time frames, go to the hourly chart, have a little look at what's going on, we have broken through an area of support. Okay, so we had this nice little higher high, higher low pattern. The market came in, consolidated, broke through, and is now creating lower high. Is that now a lower high? Problem was we had dollar news. I was going to trade that short, but we had dollar news coming up, so I didn't really want to get involved with that. But, you know, I can still see this potentially coming in lower, especially if the stock markets continue to fall, if we still see volatility rise. At the moment, volatility is coming back down a little bit, so that would usually go in favor of risk currencies. So, you know, stock markets tend to perform better in this lower risk. So if we were to see, I think the VIX for me has to get below 20. If it gets below 20, then we'll probably see a rebound in the stock market. So yeah, there is that to come, but you know, at the moment VIX is still relatively high, so the market could still try and favor sort of risk off assets, including the likes of the Japanese yen. But when we looked at the commitment of trader reports yesterday, you know, they were showing us that there's a good potential for that market to have a little pullback, right? Have a little pullback. That being said, Bank of Japan, Governor 𝖢𝖣yiِ yesterday was a little bit more positive in tone. You know, we have a little look, see. So this is what Reuters was reporting yesterday, right? BOJ unfazed by rising bond yields, signals resolve to keep hiking rates. Okay, this was yesterday, but Bank of Japan Governor 𝖢𝖣yiِ on Wednesday took in stride recent rises in bond yields, saying they were a natural reflection of market expectations of future interest rate hikes by the central bank. So yeah, they're basically talking about the idea that they are going to see a continuation in hiking interest rates. They still said inflation was kind of moderate though, so that was also something to take into consideration. But you know, highlight the central bank's intentions to phase out presence from the bond market and convince investors that, having ended its bond yield control policy, it no longer needs to step in to keep yields ultra low. And if we go take a look at the Japanese 10-year bond yields, you'll see that they are just flying. Where are they? Here we go. Up at 1.5% now. So think about it, right? This is the sort of expectations of where interest rates shall be, right? 1.5%. They're currently at 0.5 on their interest rates, right? So they are way away. The margin between current rates and where the 10-year yield is right now is a long way away. Now, if we have a little look at, I don't know if we have 2-year yields. Yeah, we do. There we go. 2-year yields are a little bit more reactive to the current expectations of interest rates, right? And they're at 0.85%. So still 0.35% above current levels. You know, if we go and put on Japan, go to economy, Japan interest rate, and then pop that on regular. Okay. Now I know that overlapped looks very similar, but you can see that it says 0.5 over here, right? That's Japan's interest rates, 0.85%. Okay, so the difference in those rates there are quite different, right? So that to me is strong Japanese yen. Okay, and that's something that we've talked about for a while. We know that hedge funds have been doing it, hedge funds have been buying into it. Nothing really new for us to kind of discuss in terms of what we expect with the Japanese yen. It's just about time in the market now, right? So I was looking at this 4-hour chart here earlier on CAD yen, and you know the market was kind of pulling back. We broke lows on the hourly chart, and I was saying to myself, is this a good market to start pushing in low again? I haven't taken this. This is just what I had on earlier to kind of show you guys, because that COT report is, you know, is kind of keeping me on edge. I know that they are crap at timing things. The commitment of trader reports are, but you know, when I look at the Japanese yen, they are at the highest levels in history. So you know, I got a feeling that they will try and. I still feel like the Japanese yen is going to be strong, but there might just be a short-term kind of relief to that. So I'll keep an eye on this. The report comes out tomorrow, so when that comes out, I might do a little post on it, just to kind of see where the changes have come from. But you can see, like, this is what I like to look at. You look at the net change in positions, you know, selling US dollars, buying pounds at the moment, which is something that we want to do. We want to be buying British pounds, we want to be buying Japanese yen, we want to be selling Canadian dollar, right? Want to be buying euro, selling Aussie, Kiwi. I'm on the fence off because they're now at record lows as well, but they are still technically selling the New Zealand dollar, right? So it kind of shows you what you can do with the commitment of trader reports when you have a little look at them in terms of, you know, net positioning and whatnot. Hi, right guy. Hope you're well, Innocent. Good afternoon to you as well. So interesting moves in the market. Aussie Swiss I quite like at the moment. I'm just kind of waiting for an opportunity there, especially as well on Aussie yen. But Aussie market is still particularly bearish. What I was looking at earlier again, if we look at the daily chart here, what phase are we in at the moment? We're in that secondary phase. Okay, so I want to see that turn. How does that turn? Well, it's when we start to see lower low, lower highs form on like the hourly chart. And we can see at the moment we have this real kind of big potential head and shoulders pattern that's forming. Maybe a push up into this 55.60 will be the catalyst. But really speaking, we need to break below these lows here. When that breaks, that would be the ideal moment to look for a continuation down. 55.50 is the first target, second target below those. But if, I mean, when you go up to the weekly chart, there's not much below here. You know, we could probably pick out the 2020 lows maybe as a target for the market. But other than that, there's not much we can kind of pick on looking left anyway. So, you know, and this would obviously compound. I think if you look at what Aussie Swiss is, it's, you know, it's a risk asset versus a safe haven asset, isn't it? So if we see global markets continue to drive lower, you know, US stock markets going lower, then you know, it's gonna create that kind of sentiment. I mean, if we look at the Oz 200, right? Look at that Oz 200. Since February, it's just been down. I don't think it's had too many higher highs, but it's down 10.34% from its highs. And, you know, this is just showing you the sentiment in, you know, Australia at the moment. I mean, the RBA cut interest rates, but it was a very hawkish cut. And since then, really, we've had that kind of decline. Let's have a look at when they cut those interest rates again. Let's have a look. Let's go to Australia. Yeah, look, the last change was on February 18th. Okay, and when we look at the Oz 200, this was here, right? So that's when the RBA cut interest rates by 25 basis points, but then turned around and said, I think the market's pricing in too many cuts. We're not as confident as what the market is in terms of pricing those in. And look at that sentiment since then. You know, push lower. Why? Because that means borrowing costs will likely stay higher. Okay, they're not happy where inflation is at the moment. So they're probably likely to leave rates higher, and borrowing costs are higher. You know, purchasing costs will be higher, especially if they expect inflation to continue on that path. So yeah, Aussie 200 at the moment pushing in low, which kind of gives you a sentiment feeling about, you know, what's going on in Australia right now. And yeah, I just think that the Australian dollar is going to suffer a little bit more. This is Aussie yen as well. We kind of broke through that trend line support here. This is I feel like a nice little area to try and get involved with the market. This one's a little bit different. If we look at the daily chart here and we look left, you know, we could be trying to target this low that formed back in July 24. We've also got some real big levels below that, sort of 88, 86, 80. Daily chart, if we look at it in terms of phases, right, we've got that nice primary phase, secondary phase, primary phase, secondary phase. Is this going to be a primary phase again? And when we look at the 4-hour chart, what I was looking at earlier anyway was the fact that we had this higher high, higher low pattern. We broke through trend line support. So, you know, that technically could be a trigger candle for some potential further downside in price. And look at the hourly. The hourly is not really giving you a lot in terms of huge sort of buying going on here. We broke this swing low here, created that lower low in price. So, you know, maybe we get a bit of a squeeze breakout. You know, that could be something to have a little look at for some downside as well. So, yeah, interesting markets at the moment. Interesting markets. Has anybody had any good trades this week? My only good trades, well, was the pound. Still in silver long, but lost one, won one on the pound. So pretty break even, or just slightly over, break even. Silver seems to be pushing those highs though, just kind of keeping an eye on those. Nat gas, I'm in, and gold right now. Oh, okay, I like those. Nat gas short, right guy, I think. That's something we were talking about before. Or you in nat gas long? Looks like we just tagged into that 5 area, didn't we? It looks like we're kind of coming off a little bit. Let's go to the futures market. Let's have a little look at what the reports were saying. Yeah, so commitment of traders reports were bearish on that gas. Nice little push down here. Yeah, I don't mind that. Don't mind that nat gas short. Gold long right now and in profit trailing stop loss. Yeah, nice. It looks like we're starting to see a new high, aren't we? I think the market's going to try and push that $3,000 level now. That's on futures. If we have a little look at CFD pricing at the moment, still a little bit off, but I think that $3,000 is now sort of incoming, isn't it? I think that's the next sort of level. Be interesting to see if we can break behind that. It's a bit of a psychological level, isn't it? That $3,000 level seems to be the sort of call for most sort of analysts to touch upon, isn't it? The $3,000 point. But we could probably go a lot further than that. We could probably go a lot further than that. You know, I wouldn't be surprised if we start pushing into the 3,200s, 250s. My granddad would be over the moon. He is a big gold investor. Big gold investor. And every time I see him, he talks about gold prices with me, which is kind of fun. So could be interesting though if you are an Aussie dollar, you know, for the Australian dollar, because usually you get good inflows from gold to the Australian dollar. We just haven't. The separation is just there at the minute. It's not great. So yeah, quite interesting for Aussie at the moment. Whether if we start to see a turnaround for the Australian dollar at some point in the future, probably go on a substantial rise. But yeah, silver's getting dragged with it as well. This is what I like to see. This is what I like to see. Nearly 1-to-1 up on that, if that can keep going. Got a 3-to-1 on this trade, so I would be happy if that one keeps going. You know, if it can get there before the end of the week, even better. But I doubt that will happen. But let's see if that can continue to punch up towards this $34-$50 area. Looking good though. Looking good so far. Just keeping one eye on dollar yen. You know, dollar yen's an interesting, same with dollar Swiss, really. You know, these two markets have been pushing aggressively lower, and I like the price action here. You know, we've had this really big move to the downside, come into an area of support here. Right, when we look left, where's it kind of found support? Down at this kind of demand zone in here from back in December. But you know, look at the buying. It doesn't look aggressive, does it? You know, if we look at the 4-hour chart, kind of very limited to the upside here right now. So I quite like the idea of maybe dollar Swiss coming back down towards these lows. Just might see it stick around a little bit. Same with dollar yen. You know, prices come up. We've kind of had the very interesting reversal pattern. If I go to an 8-hour chart, oh, maybe not then. I thought those two would be together, but they're not. 12-hour maybe. Yeah, so it's punched those together. Nice big pin candle on your 12-hour chart, right up at those previous swing lows, right off trend line resistance. You know, so from a technical perspective, looking pretty good there. I was just waiting for some dollar data to get out of the way. You know, I like this kind of setup that's happening here. Big kind of rejection going in this area here, and now we look to be starting to break down. So, you know, looking at that on a 15-minute, I was watching this potential trend line break in here. I mean, I've had it there. So if I was to sell into that, I'd be looking at kind of where to sell to, you know, maybe down in towards this 146.50. Stop loss, where can I get away with a stop loss? So that would be target. So safe stop losses above that swing high. So that's a negative risk to reward there. But that would mean that would be where my full 1% would be, right? Up at this point. Because that's when you know you're pretty wrong at that point. You've broken trend line, resistance to the downside, and whatnot. So, you know, if you're going to put your stop 148.50, probably go 148.60. 148.60. So that's 65 pips. Okay, what was it up here? Let's say the full 1%. Let's say 149.40. Let's get the old calculator out. 149.50. Take away. So it's 90 pips, isn't it? Quick math. 90 pips. Okay, and the original was 146. Okay. And 46. I might round that up to 150. Okay, so you'd use 60% of your risk. Okay. 48.60. Quite like that. Quite like that, to be honest. I might set that up. So let me have a look here. One stop loss would be 148.60. Let's see what that looks like. This is a 15-minute trade, so we're not going big risk on this. Take profit, it went down at 146. I'm gonna round that up to 147.80 and 146.80. 146.80. That's a 1.7 reward to risk trade there. But because of the COT and whatnot, let's have a look at what 0.25% looks like. 1.14. Okay. That needs to be 148.60. That needs to be 146.80. Okay. Gold flying now, you say? Let's have a look. Heading up towards that 3,000. Yeah, 1.1% up now. Yeah, I think now it's kind of took that high. It's just gone, hasn't it? Now it's took that high. I think anybody that was think about that though. Anybody that was short, you know, the pessimists, pessimists were like gold ain't going to 3,000. Anybody short here, that's your bailout point, isn't it? That's why you usually see quite big moves through highs, especially if, you know, we start to see, especially in a bullish market, because that's where the stop losses are. You know, big stop losses are there. They'll be taken out on those, and those stop losses turn into buy orders because they're buying back their position that they've sold. So yeah, hopefully that can reflect into the silver market as well. I'm hoping that kind of gives silver a little bit of a drive up. We've kind of seen a little bit of a lag behind when it comes to silver at the moment. When we get these kind of big pushes on gold, silver takes like 2 hours to kind of catch up. So I'm hoping that can reflect into silver prices as well. So yeah, we'll see. We'll see if that can kind of do something there. Because I haven't really managed to get on any gold moves. I've been kind of focusing on the silver just because of the value perspective of silver. But, you know, there's been some nice upside moves on gold, hasn't there? Gold-silver ratio just kind of keeping stum at this little level here. US 2-year bond yields stuck at 3.9% right now. Which is up actually a little bit. Up a little bit from last week. Look at the weekly chart. I'll say up. Still actually down really, isn't it? Got this kind of little gap there that's going on. So I'll be interested to see how the US bond yields finish this week. You know, I would like some further downside because that will fuel further US dollar weakness as well. You know, if you put euro dollar on here to compare. Let me just pop that there. Invert the scale. You can see how there's a really close relationship between euro US dollar and the US 2-year yields. So if we do see 2-year yields continue to decline, euro dollar's down, yeah, you're probably looking at sort of, sorry, euro dollar's up because I've just inversed the chart. So that's dollar euro is the purple line. So you're looking at sort of your dollar yen downside, things like that, which would be nice considering I've just shorted it. So we'll keep a little bit of an eye on that move there. See if we can break lower, come back down to this 146.70 now. Still keeping an eye on cable as well. I've kept my risk fairly low on dollar yen just in case something did set up here, but it looks like now because you've got that close above those highs, it looks to me like the market is just going to kind of push higher here. I think if the dollar does continue to weaken, we should see, you know, like you said, gold pushing that $3,000 level, silver pushing higher as well. Yeah, it's a shame on pound, to be honest. Bit of a shame that I got stopped out earlier. Because I do still like the upside here. Still like the upside. So yeah, I might keep an eye on this one as well, because I feel like if we do get that kind of pullback, like I've got my alert set 129.40. There could be some further upside to this pound market. So I'm going to keep a little eye on this one as well. Bit of a different day for us actually. I'm actually looking to get a bit active on the stream today. Quite there's some good moves going on. Let's look across the board. There's not really much else going on apart from those US dollar pairs. But when we look at what's going on, really, dollar yen, yeah, in that position now. Dollar Swiss hasn't really done anything, to be honest. It's kind of just chopped and gone sideways. So I don't really think that's a viable option to us. What do you think of Aussie Swiss? Yeah, just having a little look at Aussie Swiss. It's kind of pushing higher, isn't it? I think that's obviously Aussie's getting a little bit of support from this kind of dollar weakness at the moment, but I do think like Aussie's not going to keep up with that. But here we go, take a look at Aussie Swiss. I think I mapped out a trade on this earlier. I'm not too sure. No, you know, yeah, we kind of talked about this, didn't we? We've got this kind of pullback here. What I want to see is a break below these lows, right? Although I like that, you know, I like the fact that we've closed pretty close to that in there. I don't like the fact that we've found support here. So I think if we can break 55.40, I think that could open a door to a bit more downside. So I'll put an alert here. If we can get below that, otherwise we might go and test these highs again, 55.80, where we saw those kind of sellers coming in previously. Yeah, even the 4 hours still technically bullish. I think it needs to kind of form this, I don't know, this head and shoulders maybe. I think if that can form, you know, and then price can try and trade lower from that, then that would be something to have a little look at. But right now, I don't know. I don't think that's something I'd be looking at just yet. You know, we've got the breaker trend line, you know, so that's a good thing. But yeah, if you look at dollar Swiss right now, dollar Swiss is kind of popping higher. You know, if you look at that compared to sort of dollar yen has broken to the downside, whereas sort of dollar Swiss is still kind of bullish here, right? Which I guess is not what you want to see from dollar Swiss. We kind of want to see that area there being rejected, and because it just shows us that there is some momentum behind the Swiss franc still. Aussie is getting a bit of a bump higher. I mean, I feel like Aussie dollar is a bit of a mess anyway, though. Like, it's gone sideways for so long now. It's kind of hard to pick out what's kind of going on here. We're kind of in this little bit of a trading range that's going on. So I need to see, you know, if you think about what do we need to see happen on Aussie Swiss, we need the Aussie US dollar to trade lower. We need dollar Swiss to trade lower. Aussie US dollar is not moving lower. Dollar Swiss is not moving lower. Although I like the idea of dollar Swiss moving lower, I think this is a market that I do want to keep an eye on. Not broken any kind of trend to the downside yet. Still pushing higher, right? We failed to make new highs. Great, you know, that'd be ideal. But at the moment, I'm not getting it. And I think if we take out this high here, we're probably going to see a little bit more upside to dollar Swiss. I like the low range in price action. That's something that really appeals to me. Whenever I look at a market and I see that it's done, you know, an aggressive move down, very slow pullback, that to me is a big sign that we're going to see continuations. So I quite like when we get this kind of slow down in price, not much activity, you know, especially when you're thinking that if you're an aggressive seller there and you see this area as a take profit and you get out of your positions, you would probably likely see a bigger move. But we're not really seeing that here just yet. Silver starting to break higher as well. Has gold got there yet? 29.70. No, still got $30 to go. $30 to go. How are you trailing this one, right, guy? Going just below swing lows at the moment. I like that. Keeping stops below lows. Be interesting to see if this goes before 3,000, right? Everyone's looking at 3,000, but imagine it got to 29.90 and just zips lower. don't necessarily see that happening, but TP's 29.90. Like it. I like it. I was always taught to be the first one out, because you don't want to be the last one. Yeah, getting pretty close then. Trading below the lows, nice. Well, let's see. Hopefully that continues to move back to the upside. You know, silver's looking pretty good now, starting to get in there as well a little bit, starting to push higher. So hopefully that momentum can continue too. Right then, guys. Been going just over an hour now. I'm probably going to leave it there. There's not much else to kind of go over. Still like the US dollar downside in the market. I think that's a good thing to look for. Seeing gold obviously perform pretty well. Silver, I like the longs on silver. Stock markets still looking under pressure, aren't they? I think VIX needs to be below 20 again for some kind of decent opportunity for us. Quite like the dollar yen move here. Well, it's just hovering around break even at the moment, but broken to the downside there. Took a 0.25% position on this. I'll see if we can start pushing lower. You know, if not worried about that one. So just see if that one can push through. I think if we start to see further declines in the US stock markets, you know, if we see NASDAQ coming back to like 1.5% down, then I think then the market's going to again flip to that risk off situation there. So keep an eye on it. I hope you've had a good trading week so far, guys. I hope you have a great rest of your trading week. With regards to data coming up, I don't know what we've got coming up tomorrow, but I think it's GDP. Yeah, GDP out of the UK coming up tomorrow. That's going to be a big one. So if you are trading pound and cable tomorrow, just be aware that there is big GDP data coming out. I think that if we get a miss to the downside, we could probably see a little bit of a takeoff of those pound longs at the moment. So just keep an eye on that. We've got a lot of data at 7 a.m. tomorrow. So another one that you should watch as well is industrial production. That starts coming in lower as well. That's not particularly a great sign for the UK. So just be aware that that is happening, and that's going on around you tomorrow, as well as the consumer sentiment. Another big data point for the US, considering the fact that the market's reacting to consumer sentiment. So keep an eye on that as well. So thanks for watching, guys. Appreciate you all. If you could leave a like and subscribe, I would be appreciative of that. And I will catch you next week, Tuesday. See you soon.